On today's Hot Sheet, I'm discussing housing inventory and existing home sales for March. Today is Monday, April 22nd, 2024. I am Byron Lazine, and the Hot Sheet starts now. Good morning. Welcome into the Hot Sheet. Let me know which market you're tuning in live from today, as I am here on the 6:30 a.m. I guess this is Mountain Time, but it's the same as Pacific Time here this time of year in Scottsdale, Arizona. Excited to be bringing you the Hot Sheet from Arizona the next 3 days. Okay, I'm going to be attending the T3 Summit. Hopeful that I'm going to have some really interesting interviews, some interviews that maybe real estate agents wouldn't even believe that I'd be able to get. So hopefully going to be able to capture those in the next 48 hours or so, and then start releasing them right here on the BAM YouTube channel. Make sure you're subscribed for all of that. Housing Wire, which we're going to get into some Housing Wire stats here in a minute, is really going on as well with their event, The Gathering, right across the street. So there's a little bit of crossover. There's some of these CEO and exec level people in the industry bouncing back and forth. Of course, I'm looking forward to having some conversations with those, because conversations is how the industry is obviously going to continue to grow. Full form conversations, and I'm hopeful to bring you some really good ones there. All right, let's get into inventory as we do each and every single Monday here on the Hot Sheets, the only live 24-hour look back in housing Monday through Friday. And housing inventory is something that we're looking for more of. We've been rooting for it for a long time. And finally, it appears that we're really getting back to a normal flow of weekly inventory. Weekly inventory for the week. I don't know if this is, oh, there it is. I can see it moving now. Weekly inventory for the week. If you're looking on the screen, you can see rose from 526,000 plus to 543,000. The same week last year, we also saw an increase of about 12,000. I'm sorry, 8,000, and that was up to 414,000. So a much different place year over year as inventory continues to climb. And last year's peak, which was just about 570,000 active inventory, didn't happen until November the 17th. Remember, that was right around the same, 30 days after we saw the 30-year fix hit 8%. Obviously, the 30-year fix is a little bit higher right now than it was in the heart of the spring market last year. So, is this inventory induced, or are we just getting back to more of a normalized pace as we look at inventory? I'm hopeful that it's the latter. 543,000 is pretty close to the peak. I mean, if we get a couple more weeks of this type of a gain where we get, 15,000 or more, or, homes on the market, active inventory, it's only going to take us here a couple more weeks to hit the peak for 2023. And that'll be in the spring market. As we get out of the spring market, it's safe to estimate that as we get into the summer, you'll see those that miss the spring selling season will, continue to accumulate more inventory onto the market. Now, we're not looking at inventory levels anything like we saw in 2019, which was a really normal market, 862. But you see in 2019, pointing it out as a normal market, we see what happened from this point in 2019, 862,000, and the ensuing months. Every week you would see more inventory until it peaked out that particular year in June, and then really rode the summer and into the fall selling season flat. 966,000. We're not going to get there. I'm not using this as a reference of numbers that we can get to this year, but just showing you as a reference here that in a normal market, you should see inventory continue to go up throughout the remainder of the spring and into the summer, have a period of potentially being flat before you see that end of the year decline as you get closer to the holidays, which is super natural and normal. I would even expect that, obviously, this year. But if we can get that increase of inventory, we'll get into a much healthier place as it relates to inventory. And at any point, as you see more inventory, you might see more new listings. As people say, I just haven't had those opportunities to look at the market in this fashion. Most sellers are buyers on the other end. If they see more inventory, that could be enticing. Obviously, you get more inventory and a lowering of the 30-year fix, which I am not predicting in any way, shape, or form right now based on where we're at. But you get those two things, you'd see a real influx of activity on the sales front. We're going to look at existing home sales here in just a little bit. Here's what new listings look like over the past week. Almost 69,000 new listings. That blows away 2023 and 2022 of about 60,000. So we're still in a pretty, I would say, strong place. I mean, when you compare it to 2023, everything's going to look strong because that was the lowest level of new listings. But we're at least back to 2022 levels on new listings. This past week, we added 10,000 more, which is really positive. We'll hope to see this continue to increase. New listings is one of the biggest drivers that we can look at on how inventory is going to react moving forward and how much is going to accumulate. So new listings data looking good again. And let's take a look at the price cuts. A normal market, you'll see a third of homes price cut before they actually sell. 32% right now. That's up from last year's level of 29.4%. 2022, really, another all-time low in terms of price cuts because we hadn't experienced the interest rate takeover yet at that point. So 32% still below the normal third, but higher than last year. So shows you that homes are sitting a little bit longer than they have in some areas than we've experienced in the past. Okay, so there's your look at the inventory update here for this week. We've got more notes, obviously, available for you in your BAMX Hot Sheet show notes. You can access those through BAMX. Now let's take a look at existing home sales. It says NAR report for March 2024, and existing home sales for March fell. Okay, so typically you would see March, start to pick up. Didn't see that here. Home prices continue to rise and inventory continues to be low. So you see low inventory, home prices going up. Might be natural to think that home sales would follow in the upward direction, but that's not the case. Existing home sales decreased 4.3% from February to a seasonally adjusted annual rate of 4.19 million. This is also a 3.7% decrease compared to March 2023. So year over year, existing home sales are down. Obviously, if you're an agent or an investor, you'd like to see existing home sales go up. From the investor standpoint, more opportunity in the market means there's more fluidity to the market. And certainly if you're an agent, it means there's more people you can help serve. There's a huge amount of pent-up demand, people who would like to buy a home right now. If you get existing home sales trending up, you obviously have more opportunities to serve that clientele. Taking a look at the NAR report here from the month of March, you can see existing home sales seasonally adjusted annual rate trending down and getting to that, getting closer now to that 2023 bottoming out point. We typically will never see home sales drop under 4 million. We did see that at one point last year, the high threes. But there's 20 plus years of data that shows you 4 million is kind of the baseline. That's really, it's hard to imagine based on the data that you fall anywhere below that level. But we are here at the bottom level of demand. Affordability has the most to do with that. Median price of existing homes for March, according to National Association of Realtors, 393,500. The trend line, more to do with seasonality being below the 410. You would expect that 393 to encroach 4 and probably break 4 again this year as we get through the spring selling season. Existing home sale median price percent year over year, 4.8% on existing median price. As we look at the year over year mark for March, 4.8%. So still home values going up. It's really due to inventory crisis. Existing total home sales percent year over year, down 3.7%. So existing home sales, obviously the numbers were much bigger in 2023 because we were coming off a historic year in 2022. So they're starting to get a little bit better. Getting back to, zero flat year over year. Love to see this number increase towards the end of the year. If the 10-year and the 30-year continue to be a pain point for affordability, you might not see that number get to where some of the projections have come in. Realtor confidence index for March 2024 at 30 days on market was 33 compared to 29. So, realtors across the country are seeing more days on market, about 4 from March over March. They're seeing double distressed sales. That is not a headline. It is from percentage of sales, 2% to 1. Okay, so be careful when you see headlines about double or 100% over. Okay, we went from distressed sales at 1% to 2%. That's what realtors across the country are seeing. Cash sales, 28% versus 27%. Sales to investors is down 15% from 17% last year. First-time home buyers up 32% to 28% when realtors were surveyed across NAR. Existing home sales by region. South has 45% of the existing home sales, while the Northeast only has 12%. Inventory is the hardest hit in the Northeast. Midwest, 24%. West, 19%. Sales by price range. 250,000 to 500,000 has 45% of the sales. If there was more inventory in that price range, you'd see that number swell. Obviously, that's where the majority of first-time home buyers want to fit into across the country. Price change in sales from a year ago. Price range 14% up on million-plus home sales, 5% up on 750,000 to $1 million. This is something I think I would have gotten wrong last year. Looking forward, I would have expected this number to decline. But what's happened in reality is we've got really little to no inventory under 500,000. And this is where you've seen the biggest increase in inventories in these price ranges. And more inventory has brought more opportunity. And so you've seen that increase in sales there. Just taking a look at the overall picture again here on existing home sales. All the charts will be available for you to easily download inside of BAMX for the members. 4.19 million seasonally adjusted. Month over month, that's down 4.3, down 3.7% year over year. Once again, inventory is up 3.2 months versus 2.7 months in March 2023. That's the national number, 3.2 months of inventory. Know what it is in your market. Know what it is. Hey, nationally, we're seeing 3.2 months. That's an increase year over year, about a half a month. Here's where we sit in our market. It's a really important stat to be following on a monthly basis. What's months of inventory doing? How many months would it take for all the homes in the market to sell if no more new homes came on the market? That's also the easiest way to explain that to a consumer. If no homes came on the market, it would take us 3.2 months of time to sell through all of the inventory in the US, where we'd have 0 homes available. Obviously, that would never happen. People are going to continue to put their home on the market, but that is the best explanation for that data point. Anything else here? Again, foreclosures and short sales, 2% of the sales. That's below a healthy number. You could go 3-4%, be totally fine there. All right, so that's your update on existing home sales report from NAR. We'll have those charts available for you. The hot sheet show notes are available for BAMX members as well. Taking a look at where we're at on the 10-year, we're still sitting up over 4.641. Not much change there over the weekend. The 30-year fix ended the week at 7.44. The weekly came in first time over 7 in quite some time at 7.10. So still hovering around 7.5. That's like, pretty good average credit too. If you have great credit, you might be able, depending on your location, might be able to get below that. But for anybody with below average credit, it's probably going to be higher than that number. You're probably experiencing that in your market as well. If you happen to be in Scottsdale this week, DM me on Instagram at Byron Lazine. Love to connect with you, whether you're bouncing between the two, T3 or the gathering, or you're just here in general. I'll be here for the next couple of days, looking to bring some great interviews here to the channel. So make sure you subscribe for those. And make sure, if you haven't done so already, you take a look at attending the 1,000-watt brand and marketing summit, answering the wake-up call. It's a real estate event for those who want to meet the moment with confidence. We talk a lot about being an agent of change. This is June 25th to June 27th. There's a code BAM you can use to get a discount on the prices. So make sure if you do sign up, use code BAM to get your discount off of the 1,000-watt. I will be there. And we talk a lot about being an agent of change right now. That summit, when it comes to your brand and your marketing, is going to be reflective of that mindset, being an agent of change. So we'll put the link in for the 1,000-watt summit at the end of June if you're interested in that, and use code BAM to get involved there. All right, guys, I will see you back here tomorrow live at 6:30 local time, 9:30 if you're still on the East Coast. Until then, toodaloo.